All right, Nicole, if you want to go ahead and get started, we're already recording, so we can start up.
All right, perfect. Well, thank you so much. So, hello to our attendees who were able to join us today. Thank you so much for joining us. Um, and welcome to our first session, our first module of how we are able to help our small business owners better understand different aspects of being a business owner and what type of topics are most important to our business owners. There's a lot of different things that come up as a business owner, and our goal with these sessions is just to help you figure out how to best utilize resources and to make yourself successful. So, the first topic we're discussing today is building credit. And this class will be an important step towards building a better business and understanding the credit aspect when you are a business owner. My name is Nicole Butler, and I'm a small business banker. I work for Comerica Bank, and I also have a guest speaker, a guest panelist with me today. And her name is Jamie Hall. She is the banking center manager of our Midland location of Comerica. Jamie has been in banking for several years, as long as myself. So we are here to chat with you guys today and teach you what we have learned through the ropes. All right, so each of you should have a copy of the Building Credit Participant Guide. There's going to be some things that we might briefly discuss, and then there's going to be some things that we might skip over. So, but please feel free to reference that at any time because we will be following that guide. All right, so go ahead and get started here. So we do have a full agenda today, and we do want to make sure we cover as much as we can regarding building credit. So there will be times where we might ask for some engagement from our attendees. And then I'll also have different points where I ask Jamie to kind of pitch in on different pointers that she might have, or if she'd like to add anything as well. All right. Okay, so what are you going to learn today? So the purpose of today's session is going to be to help you understand how personal and business credit reporting can help your business and also how it relates to your business. Also, how to identify personal and business credit reports and scores, and how to establish and build strong personal and business credit histories. Those are really the three biggest things that we're going to focus on today. We're also going to focus on how to leverage your histories to your advantage and how different services may benefit your business as well, and how to recognize when maybe changes to your credit history could become a bigger factor as well. All right. So that just kind of touches on that there. So what we would like to do is in your participant guide, there was a form, a kind of like a survey that was asking about what do you know about credit? Some business owners will be very well versed in different aspects of credit. Others will not. Others will just have more limited understanding of different vocabulary or different verbiage or even how different things affect credit. So what I wanted to do was just take a quick moment in your participant guide. There's a pre-survey. I believe it's on page 7 of your participant guide. And we will just kind of chat about what do you know right now in regards to credit, and what questions do you have, or where do you feel like you don't understand certain things. So let me just make sure I have the right guide here. Yes. So, yep, page 7 on your participant guide, the pre-survey. And there are just 6 questions. So there's just 6 questions that kind of confirm where we're at with kind of the knowledge of different aspects of business credit as well as credit in general. So we can just take a couple of minutes for our attendees to look at that pre-survey and just circle or write down what your answers are for each of those 6 questions. And then I will go over what the correct answers are. And if anybody needs more time than a couple of minutes, please feel free to let me know. But I think a couple of minutes should be sufficient. They're pretty simple questions. So we'll go ahead and do that for just a couple of minutes.
Cool. I'm not sure if you can see the question and answer section, but it looks like we have a question already from Stacy Hawkins. And
Okay.
it looks like, how can trade lines impact business credit? And Stacy, I'll get the other answer for you as far as CMURC reporting trade lines for office space.
Yeah, perfect. So that is a great question. So we are going to touch on that later today as well. But to answer it simply right now, so trade lines do affect business credit. A lot of it has to do with if it's reported under your name personally, or also if it is reported under the business name. So we're going to touch on that today. And thank you for that, Courtney, because yeah, I unfortunately cannot see the Q&A right now.
That's
So
okay. I will go ahead and moderate that for you. No worries.
Thank you so much. All right, so I think it has been a couple of minutes. Do we need any more time to look at answering those 6 questions?
I think we should be good. I don't see anything in the chats.
Perfect. Okay. So the first question was, which of the items listed below may appear on a personal credit report? So there's 5 different options there for what might appear. There are 2 that are correct, and there are 2 that may report, I should say, on a personal credit report. And those 2 are employment and former alias. Civil judgments do not appear on personal credit. Tax liens do not appear on personal credit. And income does not appear on personal credit. So employment and then like a former alias name are the correct answers for that one. All right, the second question was, select all the business credit reporting agencies from this list. So we had 5 different options. We had Dun & Bradstreet, Experian Business, Equifax Business, PayNet, and then Small Business Financial Exchange. So for this one, it is actually all of them. So all 5 of those are business credit reporting agencies. And each of them can have similar information. Sometimes it can vary a little bit, but overall, it's a very similar view of what the business credit looks like for a business. It's just typically how it's displayed and how in-depth the information is would be your biggest variables there. Okay, the third one, true and false. Love these kinds of statements, super simple. Business credit reports do not include public record information about a business. So that is false because they do. So business credit reports do include public records about a business. So that one is false. Next one was personal and business credit scores are the same thing. So that is false because they are very different. Common misconception though, because a lot of people believe that personal credit and business credit are the same, but they are very different. So that's why that one is false. Okay, and then a lender may use the following factors, among others, to determine whether to make a loan to my business. So we had 4 different potential answers: my personal credit reports, my business plan, my business financial statements, and then my personal opinion of the viability of my business. So for this one, the first 3 are what apply. So my personal credit reports, my business plan, and then my business financial statements. Business owners' opinion of the viability of their business, while it is important because you do need to believe in your business and know that you are going to be successful and have that confidence and that plan in action to make yourself successful. Unfortunately, the opinion part does not make a difference when it comes to a loan, but the other 3 do. Okay, and last but not least, you must abide by the Fair Credit Reporting Act if you furnish information to or obtain reports from a consumer credit reporting agency. So that is true. The FCRA basically has protections in place to ensure that information is reported correctly and that privacy is always respected. So that was just a quick little 6-question survey to kind of see, kind of what your thoughts or concerns were about credit, or kind of see if there was something that surprised you, or if there was something that you didn't know. So we can do just a quick little check-in, see if anybody had any thoughts that they wanted to share. Was there anything they learned that surprised them with that survey? And Courtney, I'll just double check with you if there's anything in the chat, since unfortunately I cannot see it.
Nope, I don't see anything just yet.
Okay, perfect. Well, then without further ado, we'll get started. All right, so the first thing we're going to talk about is the big picture. So credit reporting in my business, holistically, generic view, what does it mean? So why are credit reporting agencies important to my business? So credit reporting agencies are important to your business for a lot of different reasons. But to explain it simply, you can create opportunities by how your credit histories are, or you can also limit or kind of restrict them depending on what is in those credit histories. When you apply for financing, financial institutions will review your personal credit history, and they also may review your business credit history. The history helps financial institution or creditors decide whether to extend financing, and then if so, what are the terms. Another reason it's important is to effectively manage your debts and your obligations as well. Oops, sorry, I just had a window pop up. Here we go. Unpaid personal debt can lead to a business loan denial. Healthy business and personal credit histories can help grow and sustain a healthy business as well. Credit reporting can also help you as an entrepreneur improve your business operations in other ways by helping you assess and reduce your risk. So for example, you may want or need to request the credit report of a potential business customer to consider your risk before entering into a relationship. So that really is dependent upon the industry. But if you had a large contract with someone and you were allowing them to pay you on terms, so you're allowing them to do monthly installments, you may want to look at their credit history to confirm that they don't have delinquencies, they don't have collections, they're not late on their payments. I will talk a little bit more about using credit reports in your business operations later as well. So what is credit? The definition of credit. So credit is the ability to borrow money based on the promise that you will pay it back. That's the easiest way to explain it. Examples of this are car loans, credit cards, small business loans, student loans, mortgages. Using too much credit can lead to large, what we call debt loads. So being able to use credit responsibly can be critical to your personal and business financial stability and success. So having access to financing products can help a business take advantage of investments or manage unexpected cash flow challenges, or if there's gaps. When we use the word credit today, we are generally referring to business or personal credit history, not capital, not financing, or not lending. So when you hear the word credit, it can mean different things depending on what we're talking about. So for today, it's going to be referring to business or personal credit history. Okay, so now let's chat a little bit more about the differences between personal credit versus business credit. So personal credit history is also called consumer credit history. You'll hear those words kind of used interchangeably. Personal credit history is a record of your use of credit now and in the past, and it is reported to consumer credit reporting agencies. It is always reported under your individual social security number and your individual name. Business credit history, also called commercial credit history. So again, simultaneous use there. Your business credit history refers to your business's record of handling debts and financial obligations. that are reported to business credit reporting agencies. So that is reported under your business's tax ID number and your business's name. So two different unique identifiers there. Okay. Oops. All right. Okay. So the importance of credit for a business. This is kind of a flow chart that we like to use in the finance world to kind of explain how cash flow can change and how the cash kind of comes through your business. So the first step is you access your financing or you access your cash. So when you're looking to purchase something, whether you're using a loan or whether you're using the money in your business bank account, you use that money, you then acquire the machinery, you make your inventory, whatever it is that your specific industry does, you're using that money to produce what makes you revenue. And then you're purchasing anything else that you might need. So if you might need, let's say you were a t-shirt business and you might purchase the cotton to make your t-shirts. So then you're at that stage for that particular business. And then after that, you're selling your product. So you're selling whatever it is that you're making or whatever your business is doing. And then you're collecting that income and you're starting the process over. So the manage working capital aspect is where when the money comes in, then we're starting back over. We're going back through the process. And that's kind of a cash flow chart, if you will. And each industry is going to look a little different. So it's very specific to the industries. For example, a manufacturing company is going to have a very different cash flow cycle than, say, a retail store, than, say, someone who sells clothing items. It's just going to be very different because what they need to purchase, how they purchase their items versus how they make revenue, how they sell their items is just a little bit different. So each industry will be a little bit different with the specifics of it, but that's kind of a holistic explanation for how the cash flow cycle works. So again, a little more holistic with terms here. And again, each industry might be a little different, but it takes time for a business to build a credit history. Entrepreneurs often have to assume the responsibility of financing their business, particularly during the startup phase. So therefore, personal credit history is extremely important. However, entrepreneurs should always aspire to establish a positive business credit history as they grow so that they can bolster their financing and other opportunities over time. So what this chart is kind of referencing here is if your business is new, lenders are going to review your personal credit history. So Jamie can attest to this. That startup businesses, it is very difficult to get financing using any type of business loan option. So most of our business owners that we work with who are starting up a business or who are very early into their business, less than a year, they will have to use their own personal credit, whether that is personal credit cards, whether that is home equity lines of credit, mortgages, unsecured loans, looking for investors, talking to family or friends. But it's very difficult to get any type of financing when you are a startup. So having personal credit is very important as a business owner so that you have that as a backup in the event that the business credit aspect does not pan out. Establishing a credit history under the name of your business through trade relationships with your suppliers or a business credit card may also help you obtain credit for your business in the future. As your business becomes more mature and you have more time and you have more tenure being a business owner, business credit history becomes a lot more meaningful. In the beginning, it's more important to ensure that personal credit is well established and to make sure your time in business is continuing as planned. And it is very common for business owners to be required to personally guarantee or co-sign on business loans. So that's another aspect of why having a strong personal credit history established is so important, because the bank will not just look at ABC Incorporated. They're going to look at Nicole Butler, owner of ABC Incorporated, to ensure that the loan can go through. So a business owner's personal credit history remains relevant for small business financing at all times, whether you've been in business a year or whether you've been in business 10 years. The only time that it really comes into play where we're not really heavily relying on personal credit history is if you have a very large and sophisticated business. And a good example would be like Walmart or Ford, like a very, very large business that's very complex, and that they're not going to ask the CEO of Walmart to personally guarantee something, but just because it's such a large company. So that's just kind of an example of when it would not come into play. The majority of the time it is going to come into play. All right, so before we start our case study, just wanted to check in and see if we have any questions in the chat.
Nicole, looks like we're good. If anyone else has any questions, go ahead and drop those in the Q&A area or the chat, and we'll get those answered either live or privately, however you need.
Okay, perfect. So if you have your participant guide handy, there is a quick case study that we're going to look at on page 11. I'm going to go through this pretty quickly, but if you're able to, go ahead and flip to page 11 of your participant guide, and we're going to go through this case study quickly. All right. So we have a very kind of robust description of our business owner. So Rosa is 21 years old, and she wishes to patent and sell a plant nursery irrigation system. She is partnering with her father, who is an avid gardener and retired veteran. Rosa grew up gardening with her father. While in high school, she developed an innovative water irrigation system, or water efficient irrigation system. This experience increased her interest in science and technology and led her to pursue a biochemistry and agribusiness degree. I think I said that right. She is in her second year of college and has developed an eco-friendly plant nursery technology as part of her studies. Her father has incorporated this system into his business, and Rosa and her father believe that there is a market to sell this technology to commercial nurseries and farmers. Therefore, they need financing to develop the business. Their revenue is under $80,000 a year. About $60,000 comes from 3 contracts for providing gardening services to government buildings, and about $20,000 is from sales to retailers. Her father already has a business bank account because it is a requirement to do business with the government agencies. Okay. Oh, and my apologies, I didn't move the slide forward. Sorry about that. Okay. So hearing kind of what they are looking to do, what Rosa and her father are looking to do. And we can do Q&A in the chat, or if anyone would like to speak up live. Does anyone have any kind of initial thoughts on what they could do to get some financing started for their business?
And if you'd like to speak live, just raise your hand and I can turn your audio on for you. Doesn't look like we have any volunteers just yet.
Well, that's okay. And I know I kind of went through that case study a little quickly just for time's sake. I didn't read, each of the descriptions or sentences that were in there. I kind of tried to condense it. But some things to think about. So for Rosa and her dad, it would be very difficult for them to get a business loan, a traditional business loan, because they are just starting, because they have a smaller customer base, they have a smaller amount of sales. So really the biggest things that they would want to focus on are personal credit. So using their own cash, like if they had an excess balance in their savings that they were willing to spend, they could use their own cash, or looking at using their own credit, whether that was personal credit cards, whether that was like a home equity line of credit, anything that they might have access to would be helpful in that regard, just because they're starting out. they're in the infancy stages of being a business owner. So some things to kind of think about when you're thinking about business lending for any of our attendees is, have you ever applied for a business loan or a line of credit yourself? What information and documentation did the lender obtain or request from you during the process? And did the person that you were working with, did that lender tell you if they would need to check your credit history? So just kind of dwelling on your own personal experiences, if that was something that any of you went through, kind of how your experience went. So if we had anybody that wanted to share that, welcome to do that in the chat or answer live. All right, well, I will go ahead and proceed forward. The next topic that we're going to talk about is focused on the personal credit.
It
So we're
looks
going
like
to
we
dive a
do
little
have
bit.
some questions
Oh,
here. Okay, so yep,
oh,
so
perfect.
Alicia says yes, personal credit history, credit scores, and other business financials. And Miss Jerry says they stress 2 years tax returns, but what if you had a loss twice?
Yes, so that's a great question. So reporting losses can create an obstacle with obtaining business financing. If you have a loss, it isn't necessarily going to prevent a loan from going through. What the financial institutions typically look at more closely is how did you recover the next year after a loss? So if you had a loss, let's say of 10,000 in 2022, how did it look in 2023? Was your loss about the same? Did you have a higher loss or did you have a lower loss? Because the most important thing is that the trend is going upward. So we're having more positive. We're not going down more. So if it was a $10,000 loss, the next year you'd want to be close to 10,000 or less. You don't want to be at like 20,000 for a loss, if that makes sense.
Awesome. Thank you, Nicole, for that.
Yeah, absolutely. All right, perfect. So we'll go ahead and chat a little bit more about personal credit. So I know this was one of the questions that one of our attendees had asked earlier about trade lines. So we're going to dive a little bit more into the specifics of personal credit. All right, so what is a personal credit report? A personal credit report, also called a consumer credit report, is a record of how you have managed credit accounts in the past. Really, some of the high-level overviews of what it will share is how much debt you have, how long you have had it, how frequently you have applied for credit, how much credit is available to you, and how much you're using of that credit. So that's where the trade lines come in. Whether you have made timely payments for credit accounts, and whether there is negative information about you individually in public records. So that would be things like bankruptcies, foreclosures, things of that nature. So we will take a detailed look at a sample credit report, and we will kind of chat a little bit about what that sample report looks like. But first, we'll take a look at the companies that are maintaining your credit report. So the major credit reporting agencies, and this may be information that you all already know. There's three. So it's Equifax, Experian, and TransUnion. Financial institutions, I should say, heavily utilize TransUnion. So a lot of your banks will be using TransUnion, but all three do report and all three are looked at. It's just TransUnion is kind of the go-to for a lot of financial institutions. So all three of these companies receive information from creditors. Sometimes it's monthly, sometimes it's bi-monthly. It depends on how soon your debtor reports. So for example, your credit card companies, your Capital Ones, they typically report every month. And then you have other companies like mortgage companies. They may not report every month. They may report every couple of months. There's also information collected from public records for your personal credit report, and that's more specifically to the potential derogatory information such as bankruptcy or foreclosures or things of that nature. So there's a lot of kind of drill downs here of what is in a credit report. So personal identifying information, name, social, date of birth, address, telephone number, employer. If you're married, your spouse's name may be listed as well if you've applied for joint credit. Credit history examples, open credit accounts, closed credit accounts, charged off accounts, collection accounts. So open credit accounts are your like lines of credit, your trade lines. Your closed credit accounts would be things like a mortgage or a car loan where it's an installment loan. So there's not open availability to access those funds. Inquiries where you have recently looked at getting your credit pulled. So typically a list of businesses that viewed your credit report in the last 24 months will display. Typically it's around 2 years. Sometimes it's a little bit less, but we'll see those inquiries for around that time frame. So what does not appear on a credit report? Because this is something that a lot of people will ask. So your bank account balances. So your checking account, your savings account balances, those are not going to show. And again, we touched on this a little bit earlier, but income is not going to show. Your medical history, business account information does not show on your personal credit because again, personal credit is separate from your business credit. More personally identifying information such as race, gender, religion, national origin, marital status, driving record, nothing like that is going to show on your personal credit report because your personal credit is strictly focused on the credit aspect you as an individual have obtained. Okay, whoops, sorry about that. Okay, so now we're going to talk a little bit more about what is a personal credit score. So a lot of the questions that Jamie and I will get in our banking world has a lot to do with how do I make my score higher? Or my score is 670, how do I get it above 700? But what is that number? So what is your personal credit score? What does it mean? So your credit score is a number that helps lenders and creditors determine your credit risk. It is common for lenders to use credit scores to help make loan decisions. Scores can predict different types of risk, and lenders may generate the scores themselves or use a score calculated by another company. For personal credit, it will always be looking at the bureaus. So we'll always be looking at those 3 credit reporting agencies, Equifax, Experian, and TransUnion. One of the companies that a lot of credit card companies use to say, hey, you can look at your credit score at any time, your FICO score. That is a common, what we call third-party company that will give you an estimated credit score. So yep, we believe your credit score to be around here, but that is not directly from the 3 credit reporting agencies. So always recommend use those 3 credit reporting agencies because then the information is 100% accurate with that. So we're going to touch a little bit more about that. Jamie, did you want to touch on anything real quick regarding personal credit score?
Yeah, so we have that question a lot. We'll have people that come in, whether they're younger, older, anything like that, and they want to learn how to build their credit. So the best advice I can give people is this never too early. I feel like a lot of people are always scared to like get that first credit card or maybe their child or something like that, but it is never truly too early. We have people that are just graduating, something along those lines, and we'll have them get maybe a small credit line of like $300, $500. And just try to start building their credit that way. We have secured credit card for people that maybe they have some bruised credit or something along those lines. And that's secured by basically a savings account or a small CD for limits to $500 to $5,000. And it secures that credit card, and then it just kind of holds it in a separate fund. And then as you build your credit, then you could try to apply for something unsecured down the road. So there are definitely ways to kind of repair credit and build your credit sooner rather than later. You definitely want to have credit before you need credit. That's what I always tell people, is definitely you don't want to wait until you're 26 or something like that and you need a car and you have 0 credit. We always have people that, oh, I'm just cash. We do cash for everything. Cash is king. Well, and then you don't have the cash to buy a home, or you want to start a business, or you want to do something. So cash is great, but sometimes you credit does have a place for everything. It's always beneficial. There's some people that will use securities. They'll fund it with that. And people might ask, well, why would you ever do that? Use your investments for that. Because right now, the market is really good. So, they don't want to pull anything out. They want to still have that growth. So they will like loan against their investment accounts and get a loan against that, but still have that growth in their investments. So there's a lot of different ways that you can still build your credit and use your credit without having to panic about it. So as long as you use it responsibly. And if you don't know how to do it, that's a great time to go into your local bank, any bank that you choose, and try to talk to somebody about it, whether it's you have some damaged credit, whether you have no credit, whether you have great credit, whatever it is, and find out what's the best position for you. Maybe it is kind of rolling everything into one. Maybe you're trying to try something new. Maybe you have a new venture, but there's always a solution out there for any problem. So that's the best advice I have.
Yeah, absolutely. Thank you for touching on that. And yeah, I think the two biggest things for our attendees to take away from that are it's never too early to start building credit, like Jamie said. And the best time to get credit is when you don't need it, because typically when you need it, you aren't able to get it for whatever reason. So really good points, Jamie. Thank you so much. So we're going to go a little more analytical, as I would like to say, and just real quick, take a look at what makes your credit score land at the particular number that it lands at. So again, you can spend a lot of time deep diving into personal credit and really kind of examining why is my score at 680 versus somebody being at 740. This kind of chart gives you a good reference point of what is most important. So as we can see, one of the most important things, because it is weighted the heaviest, is your past payment history. So have you been on time? Are there any collections? Are there any charge-offs? Are there any delinquencies? That is what is weighted the heaviest. The next thing that's weighted the heaviest is your outstanding debt. So how much money do you owe on your credit card versus what is your line amount? How much do you owe on your car loan versus where you started? And that aspect is called credit utilization. So basically what that means is what percentage do you still owe versus what your total loan amount was. You want that number to get as low as possible. So you always want to be paying your principal balance down so that your utilization is not very high, if that makes sense. And then so there's other factors here, like how long have you had credit? So how many years have you had credit history established? Did you have new applications recently for credit? And then what types of credit? So if you have 8 credit cards open, but no car loans, then you have all open-ended credit. There's not an installment loan. There's not a close-ended credit on your credit report. So that's a little less significant, I would say, just because it is not weighting your score as much as those other factors. So what is a good personal credit score? Now, again, a very common question that Jamie and I hear a lot. From a financial institution standpoint, most financial institutions want to see 660 or 680 as the minimum. You will hear most people say that 700 and above is considered good, and 750 or 760 and above is considered excellent. So the scores range from 300 to 850. And I've been in banking 20 years, and I have seen scores in the 400, and I have seen scores in the 800s. So there's quite a range of scores. But kind of a number to keep in the back of your mind is you always want to shoot for 660, 680 so that you are in a good spot for that. So how do we keep up with our personal credit report? So for those who do not know, and some people may already be aware of this, but you can receive one free personal credit report every 12 months. So every year from each of the 3 major credit reporting agencies. And this is completely free. The website is listed here. It's www.annualcreditreport.com. And it is very helpful to utilize this free resource so that you can review the information. There have been multiple times when myself or Jamie have worked with customers and they were not aware that something was reporting wrong. So something was showing up derogatory that should not be, or Capital One said that their last payment was late, but it wasn't. So reviewing your credit report once a year, I highly recommend doing that. And it is a completely free resource. If you want to keep it simple, you could either do all three once a year, or like once every 4 months, just pull a different bureau. I like to keep things simple and easy and do it all at once. So I recommend pull all three just once a year. So say every April you're pulling it, or every May you're pulling it. All right. And then I kind of just went over this. I kind of jumped ahead here, but make sure you're reviewing everything in detail. Make sure everything looks good. Get your reports regularly, dispute errors quickly. If you ever need to dispute anything, there is a process that's involved with that. I highly recommend work with the company first before the credit reporting agency. So if, in my example, if Capital One reported your credit card late, I would talk to Capital One first, because typically those companies can resolve it first before you dispute it through the credit reporting agency. All right, so the Fair Credit Reporting Agency, FCRA, is basically where we make sure that your personal credit information is being reported correctly, that your privacy is being honored, and that only people that you want to view your personal credit report can. So basically what that means is you always have to give permission to the bank to pull your personal credit. You always have to give permission to a car, like a car dealership, if you're going to get a car loan or things of that nature. You always have to make sure that your permission is given so that people can pull your credit. If you ever find that someone has pulled your credit without obtaining your permission first, then you can also dispute that inquiry as well. So,
All right, Nicole, looks like I have a question. It
sure.
says, is it every week now to do credit fraud? Believe you may have touched on some credit fraud pieces. So it says, isn't it every week now to do credit fraud? Stacey, I'm gonna go ahead and unmute you if you want to ask that question real quick. Give me a couple seconds. There you go. You should be able to talk. Did you want to ask your question, Stacey?
I have a lot of background noise, so I was trying to stay out. But I've seen somewhere that because of the volume of credit card fraud from people's personal credits getting impacted, that they changed the 1-year annual review to checking your scores, or your credit reports, to a weekly. Is that true?
No, good question though. No, that is still the 1-year time frame. I believe where the weekly kind of review came into play was review your credit history, your credit card transaction history, reviewing that weekly so that if you do see a fraudulent charge on your credit card, you can dispute it quicker. So some people will just review their credit card monthly, whether it's online or if they get like a paper statement in the mail, they'll just look at it monthly for that billing cycle. But it's now recommended to check it more frequently just in case there are unauthorized charges. A good question.
Thank you.
Perfect. So I know for time's sake, I will just do a quick recap here of this sample personal credit report. So we have 4 main sections. Your first section is, again, the personally identifiable information. So your name, your address, your social, your date of birth, your employment information. The second piece is your credit account summary. So this is where it's going to show your creditor information, account status, amounts owed, account types, history, a lot of the details. So in this example here, we have 2 sections. We have potentially negative items, and then we have accounts in good standing. So potentially negative items could be that there were some late payments. It could be that exceeded the credit line amount. Could be that it's been delinquent for a long time. There's a few different things that would cause it to be negative. Accounts in good standing means payments made on time, didn't exceed credit limit, no delinquencies, anything of that nature. Then we have public records. So again, if there was any, bankruptcies or anything of that nature, you would see that there. And the last piece is your inquiries. So who recently has pulled your credit? And that's, again, where I always recommend reference this to confirm that you don't see a creditor's name there that you didn't authorize to pull your credit. Okay, so best practices for building a strong personal credit history. So there's a lot of different scenarios that Jamie and I could spend hours talking about with you all, but we'll keep it real short and sweet. And again, just more generic, big picture. So you want to maintain healthy credit. So how do you do that? You pay your loans on time. So always recommended pay on or before your due date. I always recommend pay a day or two before your due date, just so there's no hiccups or issues, because even paying 1 day late can cause an issue, especially for credit cards. It can cause an issue. So I always recommend set a like notification so that you remember to do it the day or two before. I kind of touched on this earlier, but keeping outstanding revolving debt balances low. So what does that mean in non-banker speak? That means for your credit cards, if you have a $10,000 limit, you want to be owing $5,000 or less. And that is mainly because a credit utilization ratio that is good is considered 50% or less. So if you have a $10,000 credit line, you want to be at 5,000 owed or less. Pay off any outstanding collection accounts or other debts, avoid negative events that could result in public records. So you always want to try to avoid bankruptcy or foreclosure if possible, because it does dramatically affect your personal credit and it stays on your history for a very long time. If you are looking to get a major loan, such as a mortgage or a car loan, when you're comparing, if you're shopping around, those multiple inquiries do not affect you the same way, because the creditors understand that, hey, you're looking for a house, you might be applying for a mortgage at one place and shopping elsewhere, and you might find a better rate elsewhere. So if you have 3 or 4 inquiries related to a mortgage or a car loan, that's not going to affect you negatively as it would if you applied for a credit card in June and then another one in July and so on and so forth. Another good quick thing, and again, for time's sake, I'll keep it short and sweet, but you do not want to close your older accounts that are in good standing. So if you have had a credit card since you were 18 and you are now 53 years old, just keep it open. You don't even have to use it, but just keep it open, because the longer you have your credit history established, the better. So a lot of people will keep those credit cards open at zero balances, or they'll use it once a year for a small purchase, pay it down to zero. But you just want to keep that credit history established because that's your longest account, if you will. Jamie, any other quick things you'd like to add as well? I know I'm trying to keep it short and sweet. We could talk about this for a long time, but
We definitely could talk about it for a long time. There are, like, going through life and going through business, there's a lot of struggles, like with credit, with trying to start your business, trying to find the right spot. There's a lot of grants out there, but if there's not, that's when banking will come into play. So that's kind of where this specialists come in. The best advice I can have is, if you are banking somewhere where, as much as I like to say I can do it all, I cannot. So as you're banking somewhere where the branch manager is trying to do everything, I do think it is best to have a business banker that specializes in the business lending piece. In the past, we would have a branch manager that would do business lending and personal lending and do, like, manage the office and do all this stuff. And I wasn't the expert on it. Now we have a business lender that is an expert on business lending. And it is a big difference. They know the special programs that are out there. So that's the best advice I can give. And I obviously would love it if you bank with us, but if you don't, I don't care where you bank, but I think that's the best advice I can give, is have someone that specializes in business, because they are an expert. And they can really devote that time to get to know you, get to know your business, get to know what it is you're trying to build, as opposed to someone that might not be that expert for you. So that's the best advice I can have for people and businesses themselves. So
perfect.
Awesome.
Absolutely agreed.
We have a few questions in the Q&A.
Sure.
We have, is it important to get rid of multiple addresses?
No, but good question. But nope, because like for example, I myself, I think I have 5 different addresses listed on mine, and it's just always going to show the different addresses you've lived at. So nope, that's totally fine.
Okay. And then the next question, it says, as a person who's struggling with rebuilding credit, I have a question on how one is to possibly to do so while in the startup phase within 1 to 2 years of starting a business.
Yeah, great question. So rebuilding, and I'm assuming personal credit would be the scenario there. So that's where Jamie kind of touched on a couple of things that when you're starting out with credit history to do, but you can also do for rebuilding. So a really good simple option is what she had chatted about, the secured card option. So that is basically geared towards people in that situation where they need to rebuild their credit. A secured credit card is where you put basically a deposit down. So you put, let's say, $300 or $400 into an account, and then you start a credit card, and that's your line amount, $300 or $400. Then you make payments like you would on a regular credit card and continue using as a regular credit card. But if you ever defaulted, if you ever did not pay, then they would take that money from that down payment from that account to recoup it. But that is a really good way to start, is doing something like a secured card, because that is your easiest and quickest way to reestablish a strong personal credit line.
And I have seen people that do that, whether they're rebuilding or starting out. It typically starts to make a difference within 6 months, kind of with no credit, to a year to kind of start that rebuilding. So it depends on kind of where you're at in that process. And then if you have the kind of negative impacts, like, so we're rebuilding, it might take a little bit longer than that 6 months. It depends on kind of where you're at, but you know, it's never too early to start, like I've said. So, you know, give it a start. You know, if you can only do it with $300, start with 300, and then you know, do 300 and start another one, you know, with $300 down the road. So maybe it looks like you have 2 or 3, you know, cards or whatever it is. But and then like we can cash secured, so you can do cash secured loans. So we don't want to have 16 credit cards, but maybe do a cash secured personal loan too, which I know sometimes seems like a crazy option. They're like, why am I paying money for my own money? But it is to rebuild your credit. So the long-term benefits of it will outweigh the cost that you're paying. So.
Yep, absolutely.
Okay, perfect. All right, looks like that is all of the questions that I see in the Q&A for now. If anyone else has any questions, feel free to jump those in. We have about a few more minutes, but we can get those questions answered for you before we head out.
Perfect. All right, yeah, and I will. I may not be able to get through everything. I apologize. I tried to condense, but I know I'm running short on time, so I will kind of whiz through the next section a little bit faster. So I'm going to go ahead and keep going here. Okay, so business credit reporting. So business credit reporting, what are business credit reports? They are risk assessment tools used to evaluate the risk of lending or extending trade credit or contracting with a business. So how is it different? So a personal credit report, again, we kind of touched on this earlier, is going to have personal identifying information. It's related to Nicole Butler under my personal SOJ. My business credit report would be under Nicole Butler LLC using that specific tax ID number. So my personal credit information is not going to be on my business credit report, and then vice versa. So Nicole Butler LLC is not going to report under myself, Nicole Butler, and Nicole Butler is not going to report under Nicole Butler LLC. So another common thing that Jamie and I do see is a lot of people when they start out may not obtain a tax ID number for their business as its own entity, and always recommend that. Always make sure you have a separate tax ID for the business entity so that it is its own entity. So, all right. So this goes into, again, a lot more specific information. This current slide is going to give you a lot of different different, I guess you could say, classifications, and really kind of dive deep into what's a business credit history example, what's a public record information example. The biggest thing with business credit report is making sure, again, that things are accurate. So making sure that there's no delinquencies reported that shouldn't be there. There's not derogatory information that shouldn't be there, and that things are being reported correctly for that. Many consumer lending regulations, such as the FCRA, do not apply to business credit reporting. So business credit reporting agencies do still have procedures in place, though. So it's a little bit different if you're disputing something on your business credit report compared to your personal credit report, but not so much what you would see as the business owner. It's more about the process. So kind of the back end and the back office, the operational aspect of how they work through that, and also how long information stays on there. Okay, so again, a lot of people will ask Jamie and I, well, what's the difference between a business credit score and a personal credit score? So a business credit score is created by the business credit reporting agencies, and there's a wide variety of scoring ranges and rating systems. So depending on which of the 5, because there's 5 of them, depending on which of the 5 we look at, it's kind of all over the map with how things are determined. So we're not going to dive too deep into that, just because you could really get lost in the weeds with that one. Personal credit is straightforward. Your score is between 300 and 850. There's 3 different bureaus. That's pretty standard. But business credit is a little bit different. A lot of it comes down to the complexity of the business, the loan type, and also the structure of the business. Okay. And again, we kind of touched on this, making sure that you check your business credit report after you have established a tax ID number and have begun to utilize credit. And that's more geared for businesses that have been in business, at least 2 years. This is kind of the step for those businesses. So if you're in the infancy stages of your business, you don't need to worry about doing this. But this talks about creating an account with Dun & Bradstreet to access your D&B business credit report as well. Okay. All right. And then again, for time's sake, we're not going to do our exercise here. Okay. So another good question is, why should I establish business credit? So really the best reason to establish business credit is so that in the event that you need financing for a larger project, to buy a building, to buy a vehicle, if you're in manufacturing, to buy a very large piece of equipment, you want to have business credit history established just so that you can utilize financing options in the future. Again, in the infancy stages, you're using personal credit, but after you've been in business, a good time frame is 2 years. You want to make sure you're using business credit, because your ultimate goal is to pull away from using personal credit and pivot over to the business, acting as its own separate entity and representing itself. Okay. And again, a lot of this are things I've already touched on. Making sure you have that tax ID number, which is also called a EIN, employer identification number. And always make sure you know your tax ID number, or have access to the document that comes from the IRS. For those who don't know, you obtain your tax ID number, your employer identification number, through the IRS. You can do it online, very simple, takes about 5 minutes, irs.gov. Okay, best practices for strong credit, very similar to personal credit. So maintain healthy credit, make sure that all of your loans are paid on time, make sure any taxes that are associated with the business are paid on time. Make sure that your business is visible, maintain good relationships with your suppliers and vendors. And again, a big one I've touched on a lot today, separate your personal and business finances as much as possible. Again, in the beginning, there's going to be some commingling. But when you're able to, you want to segregate that as much as possible and keep monitoring everything to make sure accurate reporting. Okay, and again, for time's sake, I'm going to skip our case study. We can always revisit that, or if any of you have further questions about the case study and would like to do a deeper dive into it, you can please feel free. I'll share my contact information, and you can email me or call me if you'd like to do a more deep dive into the case study. But I know I'm running a little over, so for time's sake, I'll proceed. So some questions that may come up when you are building your business, and as you continue to gain more time being a business owner, is in the next year, how do you think having a healthy business report could help your business? And in the next 5 years, how do you think it would help? So those questions are kind of geared towards thinking about, what are my goals long-term? What long-term purchases am I looking to make? Am I outgrowing my office space or my home office? Do I need to look at getting a building? Do I need to look at getting a large piece of equipment? Because that, again, can really affect how you're doing your business and how you're planning for the future. All right, so this is Jamie and mine's job. This is a lot of what we do is we're lenders. So how lenders evaluate your credit worthiness. So again, small businesses, again, in the beginning, you're using your personal credit to really kind of finance things. And then after the business has been in business for 2 years, we're looking at the business entity as itself separately. But most small businesses, you will always be reviewing the business owner's personal credit history to some degree. So, yeah, I'm going to move on to the next one. So again, some of this you may already know, our attendees may already know this, but there are 5 C's of credit, and this is kind of a standard no matter what institution you go to. So there's 5 C's of credit. There's capacity, collateral, credit history, conditions, and character. So this is, again, for personal credit or business credit, the 5 C's still apply, whether we're looking at Nicole Butler LLC or Nicole Butler as an individual. Then there's non-traditional data. So non-traditional data that may still help lenders predict risk, but typically not common. Things like utilities, telephone services that report on personal credit, business credit reporting examples are online business reviews, e-commerce trade, and merchant account transactions. Again, this is not as prevalent and is not really looked at, but just worth mentioning, so that, for example, if you were past due on electric or gas for yourself personally and had like a shut-off situation, that can show up as a kind of potential negative on your personal credit. For business credit, if you had significantly, what's the right word? If you had a significant amount of negative online reviews, or if you had an issue with a vendor and they reported something negative, again, that's where that can come into play, but not as prevalent. The 5 C's are really what matters. Yeah, so I'm going to skip past this part because this just dives a little bit deeper into what we just chatted about. Okay, and again, for time's sake, I'm going to skip the case study. Sorry, Rosa, I'm skipping over Rosa. So best practices for entrepreneurs. Know your credit, know your lender, and know your rights. So know, how often are you able to check your credit for free? You have to make sure you're giving permission to people in order for them to pull credit, whether it's business or personal credit. There has to be that permission granted in order for it to be pulled. Okay. And then again, I am going to skip past this just for time's sake. So this is the next section chats a little bit more about credit reporting and business operations. So again, we chatted about this. If anyone has further questions about this, please let me know. You can reach out to me individually. All right, so some key points to remember. Personal credit histories versus business credit histories. So personal credit histories are your consumer credit reporting agencies, you as an individual, using personal identifying information. Business credit histories are through business credit reporting agencies, and they're specific to the business entity itself. So one is for Nicole Butler, one is for Nicole Butler LLC. Easiest way that I can break it down. Both are very important for your business. So like Jamie touched on earlier, personal credit history, it's never too early to start or to start rebuilding. I've worked with a lot of people over the years that had, like Jamie said, life situations come up, things happen, and they just had to work on rebuilding. And that happens and that's okay, but it's never too early to start. So if you are in that situation, please don't be discouraged or don't feel like you can't do anything, because you definitely can. Yeah, so some other things to remember. Again, we kind of touched on these. Lenders and others will use credit information in different ways, and understanding your credit and achieving a healthy credit history are only going to help increase your opportunities for utilizing different financing options over the years. Okay, so I apologize, we're 5 minutes over, but hopefully condensing some of the information was helpful here. And again, if anybody has further questions about a topic, I'm happy to speak one-on-one with anyone who would like further elaboration on anything we discussed. Are there any final questions in the Q&A or that anyone would like to ask live?
Yes, there is 2 questions from the same person, and I did unmute her, so she should be able to go ahead and talk.
Perfect.
Was that me?
Yes, ma'am.
Hi, you guys, and I'm not sure. Unfortunately, I was having some technical issues, so you may have covered this. So I hope I'm not asking you to repeat yourselves, but where is the business credit data being pulled from, or where are we able to see that? That's question 1. And then question 2 is more about what you just talked about. And it's basically after the business is beyond the 2-year mark, and one is starting to look into funding options. Do lenders consider with the personal credit that there may still be some negative marks, but how you said there may be over time where there's some a reduction in like the debt or things of that nature? Are those things considered where you may not be on the absolute positive side of a personal credit score, but you do see over time that there has been that rebuilding happening? And does that play a part when the business is beyond the 2 years?
Yeah, yep, good questions. So for the first question was about the business credit reporting agencies, because you were asking specifically who the agencies are, right?
Yes.
Okay,
Yes.
perfect. So there are 5. The most common one you will hear people reference is Dun & Bradstreet. That's considered D&B. There's Experian Business, there's Equifax Business, there's PayNet, and then there's Small Business Financial Exchange. The most common one that lenders will use are the first 3, are Dun & Bradstreet, Experian Business, and Equifax Business. So Dun & Bradstreet is the one that you can register for a free account so that you can monitor your business credit through them. And as far as I know, Experian Business and Equifax Business are still free as well to create an account and just be able to monitor it as well to see how that's going. And then for your second question, so the simple answer to your question is that a lot of what lenders are going to look at from a personal credit standpoint is pretty black and white. So a lot of it comes down to score and then if there are delinquencies. Now, to your point, what if you had somebody who was rebuilding credit? If their credit score meets the minimum score, that's the most important thing. And again, a good kind of point of reference is 660 or 680. As long as that score is met, that's going to be a big determining factor. If they see that, okay, Nicole Butler had some derogatory information a year ago, but nothing has happened since then, and she's at the minimum score, great, you're good. Now, if I wasn't at the minimum credit score, unfortunately, the rebuilding or the pattern or the history would not make a difference because it is pretty black and white when it comes to the score. Does that make sense?
Yes.
Okay.
Another thing, Alicia, too, they'll look for too that collections are paid off. So if you have something in collections that, or they were in collections, that's okay, as long as those collections kind of are paid off. So they don't want something kind of still in collections. So the collections, they're still going to be on there, but are those collections now paid?
Yep.
Okay.
Great point,
And
Jamie.
then, I'm sorry, did you also say what a healthy business credit score is? Like, what is that number? What is that average number? What is that, or the bottom, I guess?
Yeah, nope, great question. So there's actually not a black and white answer for that because the way that the scoring occurs is very different from a personal credit score. So personal credit score is pretty black and white. This is your range. This is the number you want to be at. Business credit, because we have 5 different agencies that report on business credit, there's not really a set range because each agency does it a little different. Some business loans report differently than others. Some business credit cards report differently than others. So we do not have a black and white answer for that. But that's a good question.
Okay, thank you.
Yeah, no problem.
All right, looks like, wait, one more. What about Paydex? Did you want to ask that question, Jerry? Just one second, I can unmute you here. Oh, sorry, just takes a little while. Okay, you should be able to talk now. Miss Jerry, I think you're on mute though.
Okay, can you hear me now?
Yes, ma'am.
Yes.
So my question is, what about Paydex? Because there's a lot of chatter right now about the Dun& Bradstreet and your Paydex score. So you can use business credit to acquire things that you need for your business. Like I have a photo business, so
Okay.
a lot of transporting and like you said, every company is different. So I'm not like manufacturing anything. So I'm not buying supplies
Right.
all the time. But I
Yeah.
do certain things in order to expand my reach. Okay. And so
Okay.
a lot of talk is going on about Paydex. So I was just wondering if you could elaborate on that.
Yeah, that's a great question, Jerry. I honestly have not heard that chatter myself. So I'm not sure what specifically is going to be changing or evolving with that. I do know that with Dun& Bradstreet, their score, a lot of it is based on industry specific things, like you just mentioned, because for your photo business, the score is going to be very different than, say, a manufacturer or even a like a restaurant or a bakery, because the cash flow cycle is very different. So I can definitely look into what you're referencing, and I'll share my contact information with you, and I can do some further research and reach out to you with that as well.
Okay. Okay. Thank you.
Yeah, no problem.
Hey, it looks like that is all of the questions that we have in the chat. Thank you so much, Nicole and Jamie, both. You guys are amazing. This was a great session. Again, we'll have it all recorded and into the resource hub before the end of the week.
Thanks for having me.
Perfect. Thank you. Yeah.
Yes,
Yeah, and I'm
absolutely.
happy if anyone wanted further elaboration. Yeah, please feel free to reach out. I know I kind of started whizzing through some things at the end, so let me know if anyone would like further elaboration. I'm happy to speak with people one-on-one.
Okay, perfect. That's awesome. All right. Thank you so much, everyone, for joining us for Strategize Me today. Meet us here again next week for another topic. So you should be able to see that and get registered for those. Awesome. Thank you
Thank you,
all.
everyone.
Bye. Have a good day.
Bye.
You too.
Thank you.